Welcome back, all. Great to have you here for generating income in your portfolio. My name is Mike Fairbourn. Looking forward to our discussion today. Really wanted to focus in on a formula that's used oftentimes to give traders insights into the valuation metric of a company. It's probably one that you're not thinking of, one that has been used by a number of different, I would say fairly famous traders, investors, names you might have heard of before. But a very interesting indicator nonetheless that I've created for us in ThinkScript as a column that we can use now going forward. So I look forward to going through that with you as we dive into today's discussion. I would like to welcome you all here today, joining the chat by my good friend and colleague, James Boyd. You'll see him in the chat as JB. And any questions, comments, I'll be looking for those. And James, well suited for that, does teach another fundamental class. And feel free to fire away. Any topic requests as well are also welcome. Well, with that, let's go ahead and start off first, just hitting into some disclosure items to get going here. Now, folks, options do carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. A few additional points. The paper money software application is for educational purposes only. Now, investing does involve risk, including loss of principal. Past performance of any security or strategy does not guarantee future results or success. As we look over here on the next slide, there are risks associated with investing in dividend-paying stocks, of course, including but not limited to the risk that stocks may reduce or stop paying dividends altogether. Please be mindful of that point. Additional points listed here as we dive on into our discussion. Now, getting back to just our methods of income generation, just as a quick reminder of what we do in this class. We do focus in on dividends. It's going to be core, really kind of a core part of our discussion nearly each and every week, as it ties into dividend-paying stocks, those that have a long history of paying dividends, not to mention, REITs, real estate investment trusts out there. We've also got other categories that we'll talk about from time to time in terms of options. And today we're going to actually do a comparison with bonds shortly, but that's a topic that we do discuss as well. So I am familiar just looking at everybody here today. Most of the names I'm familiar. If you are new, definitely let us know in the chat. Just give us a hi so we can welcome you in. It's great to have you all here. And folks, I might have already said that, but let's go ahead and dive on into our discussion here today. By the way, let's start off with the markets. How did we finish off? I heard the opening bell, or the closing bell. I'm sorry. It makes the same sound. But I heard that bell go off, and that signifies the market closing. Here it is right here. Well, higher highs and higher lows, clearly all-time high yesterday. We got close to that actually again today. We just kind of see the same sort of, as of late, higher highs and clearly higher lows in this run, taking out this longer-term range. Now, a little bit different as we do tie in other sorts of, indices, as you can see over here. We are not getting higher highs on the NASDAQ 100, but we are getting the trend still going higher. I've mapped out here a couple of just Fibonacci levels as well that I'll do sometimes off of a flag pattern. That would be the full retracement of the flag, but we did pull back a little bit today. As you can see quickly, we'll take a look at the Russell, which has been really struggling relative to everything else, but wanted to show this because, well, with the Russell, we are still testing, and actually we didn't quite have an all-time high. This might have been the second. No, it's close. Anyways, this is a high in the Russell that we saw over here, clearly, and it does represent a resistance level, which we've been struggling at for a long time. This is not an all-time high. This would just be a 52-week new high. Here's a glance of where the all-time high would be. We are above that range, and so, the small caps, which is not unusual, have been a little bit pressured. A lot of times when there is volatility in the market, you will see the small caps. They might be stronger if it's upside volatility, or if they're selling off, it'll be quicker to the downside. But that's just kind of a broad look at the markets. I have been looking recently at the sector grid. Let's just see how we finished off the day. We were getting a pretty good bounce in some of the sectors, and these can be very, very interesting areas to look at when you do see sector strength. Again, these are each of the sectors in the S&P 500 index. Now, the S&P down here, again, it's just an interesting reference point, but collectively, each of these together really kind of helps to formulate for us what the S&P looks like. as you can see down here. That's where we're at today, but many of these broad sectors have begun to break higher, or at least flag a little bit higher to the upside. I've noted up top here, and I've mentioned this just a couple of times, but materials has done so. I mentioned this a few times in the classes. Materials, healthcare, a little bit of a flag, possible break, but we did dip a little bit today. You have others like industrials that had kind of a bit of a flag sideways and have broken out some as well. We'll see how things go. But again, these are really interesting areas to look at, particularly in the S&P 500, because as we look at dividend paying stocks, much of what we look at too can be the underlying stock itself. What does that look like? The capital gain on the underlying stock, separate from, let's say, dividend income, could be really quite different, right? I mean, in terms of total performance. If a stock is really quite strong, let's just say, for example, the sector looks good, the charts look good, whatever the case might be. And a lot of times, to get an entire sector moving higher, oftentimes there might be, a larger macro theme in place to be doing that with whatever we're looking at, energy, whatever the case might be. Just always remember, you can always just scoot over here into the scan tab if at any time you wanted to just take a look at the S&P 500, any of these sectors. I'll just pull this over here for now. But in the scan tab, if we're looking at the S&P 500, I actually have materials up right now. And how I got that, I just scrolled down to industry, and I just went straight over into materials and just selected everything in materials right there. Real simple and easy to do. Just follow it over with the mouse, click on that, and you can see if I click scan, well, we're getting the same number, but we looked at it earlier. There are 27 material stocks that make up this index within the S&P 500. So this right here is a combination of 27 companies out of the 500, actually. So not a really large number, but it's interesting to know. Now, of these material companies, how many of them do pay a dividend? If we're looking at dividend stocks specifically, well, here's a yield right here. It appears that every single one of them pay a yield. And if we're looking at just the dividend yield specifically, I can click on the column and see, well, let's see, Martin Marietta Materials, that pays the lowest. It's very, very small. It's about 0.56. I click again. The highest one happens to be this LYB. Now, I haven't looked at that one lately, but there's Dow Chemical behind it. Let's just take a look at a couple of these. This is just actually one component of these companies, just the yield itself. Of course, there's so much more we'd want to look at. There can be a lot of issues just selecting the highest yield, right? It's not just getting the best dividend yield. There can be risks behind that, and there sometimes are reasons why that yield is high. One thing I have created over here is this is actually I've developed this. I should say all I've done is change it today. It's not the 3-month, it is a 1-month return. And if I could just click on it and pull it up to highlight it specifically for this class, I did change this. I'm gonna go ahead and just change this now. I put it into a 1-month return because we have seen a pretty big 1-month change within the materials sector. And so I've got that here listed right here, and we'll let that load and I'll kind of sort this out. But instead of posting it in yield, you can see what really has kind of been moving over that time frame too. Where the performance has been, maybe tied in also to a dividend yield. We've seen a nice spike in Dow. I'll just pull that up for example here. But it's got a yield of 5.33, and you've got a return, a monthly return in terms of a price percentage move over the last, well, it's based on the last 22 days is the way I've set this up. And that's at about close to 5%. So these are percentage columns. So it actually kind of matches or very close to the annual dividend yield as it stands right now. Let's pull this up and let's just take a look at Dow as an approach to do income type investigation with companies that maybe are a little bit more established, those within the S&P 500. Dow did not have a great day today. You can see that lift in the Dow over here. Dow Chemical as opposed to the Dow Jones Industrial Average. But you can see we did break a high. It did pull back. Today was a tough day in the markets. But there we go. Okay, falling in though into the material sector. Now, there are other companies that would be outside this group. We're just focused today, as we looked at this, companies that are also right? Because we scanned in initially S&P 500, and then we can really break it down a little bit further into materials. So there are some really cool tools out here. I thought I would just bring that up to you because I think it's an easy way to do it, to do these quick checks. Let me scroll down and see. Let's see. China says, how did you get those green labels on your names of the grid? I'll tell you what. Yeah, I can actually talk about something like that in the ThinkScript class on Friday, where we go into some of those details. That's a class I do teach. But I did create this, and what I can do is I can share this right now with everybody, just so you have it. Let's see. Let's just go ahead and, yeah, edit the formula should give me the share button. And I can actually post this for everybody as well when we're done. Well, for those people viewing this broadcast as an archive session or recorded session, it'll be in the description under YouTube. You just want to click on more. It'll be down there. And I'm going to actually have another script down there as well. I'll post there for you, but I'm going to share this. Oh, I think I just did already, but whatever. I'll do it again. Click on this and we'll put it right down here for you. So now you can just have it there. But to answer your question specifically, it's down at the bottom. You can put different colors on the labels. Okay. And it looks like, yeah, we had that same question for the sector grid. I'm going to give you this as well, just so you have that. I think it's a nice one to have. It will save time too. Remember always, although we're just sending these out, they're part of just pulling data off of the platform here, but they're not guaranteed for timeliness or accuracy because they are reliant on the data that's being that's flowing into the platform right now. Okay. Now, what I want to talk about next is going right into the core of our discussion here, and I'll get some charts pulled up just so we can reference this on any old chart that we might be looking at. Here is one we've probably all seen, Coca-Cola. All right, so looking at Coke here, we'll use this as an example. When we talk about dividend-paying companies, we know that we can tap in now. I'll pick this up and pull this over here to what we'd referred to previously in the past are those dividend aristocrats. And on the left-hand sidebar, what you want to do is just under a watch list, right? So you've clicked on the plus sign down here. You've selected that. Scroll on down into the first public folder, and you'll see the 25-year dividend list right here. Okay, I've got to open it up so you can see it. These companies have been known as the dividend aristocrats because they've paid dividends each and every year. I'm sorry, they've raised dividends each and every year for the past 25 years minimum without missing a single year. In other words, you've had to have raised it each and every year for 25 years. Okay. And so with that, we're looking at dividend yields that we can pull up in a column over here as we look at this. And as we talked, sometimes these higher yields, this is the highest yield right now. It is Ben. Simple Ben. It's Franklin Resources. Franklin Resources has been down for a while. It's still an aristocrat, and the yield is actually quite high. Obviously, part of that is going to be the dividend has been increasing, but prices have been decreasing, pushing up that yield. If I go to the trade tab, I can highlight this right now, and we can look at some other details in here. For example, the PE ratio is actually really, really quite low right now. Okay, now the PE ratio is a reference point for valuation metrics, but there's also one that a number of, let's say, like Warren Buffett is one that has likely heard of Warren Buffett, but he's talked about companies that have what's referred to as an earnings yield. Okay, now we don't have that as like normally a setup as a column in earnings yield. I've built one here for us to look at, just a kind of a basic one. But basically what it does is it takes the earnings of a company. Okay, so earnings are just, we're talking about public companies. So we're looking at earnings per share. And what we're doing is we're dividing that by price. Okay, and we're looking at that percent. Some of these famous traders, investors, they say, hey, I'm not going to go for anything less than 8%. They want to get an 8% dividend type yield, or excuse me, earnings yield on a company. That is the earnings yield. That's what we're looking at right here. So it tells us really how much a company earns relative to its stock price. So at this price, what is the company earning annually in terms of earnings? And so, in a sense, that's kind of like a financial metric for us. It shows us how much profit, using earnings as an example, how much profit a company has provided to an investor. So, what are they earning in terms of a percent for the company based on that earnings, earnings per share? Okay. So let's go ahead and get that list out here right now, and I'll share that so you all have it. I've just added this into a column here under the earnings yield. I've got it next to the yield. In fact, let's just put it front and center here in terms of earnings yield. And we've got this set up. This currently, right now, ADM, Archer Daniels Midland, okay, agricultural product company. There we go. Earning 9.5% a year. Now, based on what some investors would look at, I just mentioned to you the 8%. They want to make sure if they're whatever price they're buying in at, they're at least getting a return of 8% a year. Now, people could vary with that. Obviously, you don't have to. I mean, that's just a general reference that has been mentioned. So somewhat of a very broad type guideline that traders could look at. Okay, but just think about if you're investing in a company, what kind of a return, using earnings as a guide for profitability, do you want on the year based on this price? Companies right here are earning 9.5%. Now, if I click it again, we go down the list, we're going to see that other companies aren't doing so well. In fact, Ben was I not at the very top? Okay, it's supposed to put it in ascending or descending order. There you go. But hey, we'll shoot with 13 right there. That's the highest. Ben actually has the highest right now, earnings yield. We just looked at Ben. The next one, though, this in terms of earnings is a 2.37% for that Eco Lab. ECL symbol is a specialty chemical company. I'm going to click that again. Okay, for some reason it's putting the 13 at the bottom. I might need to look into that. It may just be that it's this demo account as well. I've had some issues with that in the past, but here we go. So that is a reference point here for us to kind of look at. We can also reference the yield right next to it too. Okay, so you've got earnings, the earnings yield of the company, and the yield itself. Now, what we can do is we can look at this from a valuation perspective as well. Generally, a higher earnings yield can help us to indicate that a company is potentially undervalued compared to its earnings, making it possible, more attractive investment relative to another. It's one method to look at, for investors looking at the value component of the yield. Now, the one thing we've already done that we kind of build on is we're already talking about dividend consistency. That's kind of baked into what we're talking about, at least over the past 25 years. We know things can change, but we're just saying, hey, over the past 25 years, a history, that is the group that we're looking at right now of raising the dividend, right? Can always change, but we're basing it on that too. So there could be a consistency of raising that dividend yield. The fact that they have been able to raise the dividend yield for as many years can give some indicators, some indications that, hey, well, they've been able to make it in good times and bad. Maybe they do know how to generate income. So the next key point I wanted to focus in on is the earnings yield is a very interesting figure, but remember, it's tied into earnings per share, folks. So what is critical is that we have an expectation that the earnings per share can be consistent at the current level that it's at, or potentially going higher down the road. Okay, an expectation that it might, be moving on up, because we want to get that portion of the equation down. This is what we've got in the earnings yield. And before we even go into that, we just want to tap in, because these are really effectively, the dividend aristocrats as they've been termed. But I wanted to choose something else. In fact, say for example, what is Berkshire Hathaway at? I'm going to go ahead and just create one over here. I can use this default, whatever, that's fine. What I'm going to do is I'm going to put in, no, I'm not going to use that. I'm going to create one myself just from scratch. In fact, what I'm going to do is come down here and I'm going to go into, let's see, what is this? Dividends. Shoot, I can just use really anything. It wouldn't be a problem. Here's this one called current. Fine. Whatever we have in there. Don't have a lot of those in there. This is kind of an old one, I guess. But if I go over here and I just start typing in, okay, so BRKB, I think it's /B. Yeah. No, it's not. It's dot. This is the Berkshire Hathaway fund, Berkshire B. There you go. And nothing's coming up. Okay, great. Let's see. Doing something wrong. I wanted to show you what that is trading at right now, just as a general reference point. There you go. Now it works. That's just how it goes. I put it in the second time and it'll work. Another holding that Warren Buffett does have, I'm just thinking of one, just totally random off the top of my head, is Occidental Petroleum. These two, let's go ahead and just look at those right now and see where they stand with the earnings yield. And all I'm going to simply do is go into my drop-down column, and I'm going to go into, it was kind of at the top, easy to find. There's our current. Okay. Berkshire Hathaway, right there. Earnings yield, as it stands right now, is about, well, it's interesting because it's very, very close to what some traders will look for, close to that 7-8%. It's actually a little bit higher than 7%, right? And so too is the holding here of Occidental. So interesting. That might map where, an investor or trader might be looking for. I just bring that point up because there's been a lot said about certain individuals looking for 7-8% or higher. I think, yeah, it was 7 and change or something like that, around 7 to 8%. Anyways, that is interesting. I just wanted to check it out on the fly and see where that came in at right there. So the yield on that, and it's ran up. I think it's had a pretty big run, but obviously the price is impactful to that, that formula, how that formula works. And wow, yeah, look at that. So pretty substantial run up. But what does it tell you? Even with higher prices, let's just say on a given stock, to stay in that 7-8% range at least, what do we have to have happening down here below in earnings? Folks, it's really, you have to have this. You have to have earnings per share. Let's go ahead and slip that P in. Earnings per share going higher, because you've got to, right, in terms of the formula, the earnings over the price of the stock. If the price of the stock is going to go up, you've got to have earnings going up as well. So do you see what it's doing here for us? It's giving us sort of a reference. How have earnings been doing, even relative to the price move? Does it still make sense for an investor to look at something like this if, in fact, the price has already run up a lot? In other words, have the earnings been keeping up with the price? Because if not, that could be an issue. And there's so that's one way to look at this. We can look at over here. If I go over here, here is Berkshire Hathaway. Looks like nothing's coming up on it. That's fine. I'll just choose the one we were looking at before, like say, for example, Coke. We can scoot down here and just see also what has been the consistency of earnings. Because one of the key points we said, if we're looking at the earnings yield and trying to get information from it, we want to make sure that earnings per share is consistent or preferably going up. Because if we're getting a good earnings yield, let's just say we're calling a good earnings yield at 7% or higher, okay, we think that might be reasonable, or whatever the case might be. Somebody might be looking for that. Well, if that's the case, then earnings need to have that consistency in those earnings, right? You have to have an expectation that it's going to be at least flat to going higher potentially down the road. Okay, one way to do it is just look at the dividend history. That's a 5-year history right there that you can get under fundamentals, and that's sub-tab fundamentals, main tab, analyze tab right there. Okay, good. Now, the other way to do it too, if we're looking at Coke or whatever it is, in fact, let's go back to our list, because this is, for a lot of traders, investors, very fertile ground to look for this 25-year history of paying that's 24-hour, 25-year right there, 25 plus year right there, the quote-unquote aristocrats as it's used. What we could do is we could choose a company from here. We can look, we'll go back to our yield here. a column, and I'm just going to reselect this. There is the 25-year, and let's go ahead and just pull this back up again. Click, click, click. There we go. So we looked at ADM. Now, for example, ADM, we could look over here and just see what the history has been. Oh, let's link that. Why isn't that linking? Hang on a sec, folks. It's linked and it's linked. Huh. ADM. I'll type it in again. Maybe it's just slow to the game. Okay, there we go. So ADM, scoot down here and take a look at it. Well, you can see earnings have actually been increasing over the last 5 years. You see that? So all else equal, that's a positive for what we're seeing. I mean, all else equal, yeah, we're seeing those numbers going higher for our earnings yield. That's our reference. Up to sideways, we could see it right there, a track record. That's one way to do it. The other way is to just go right up top here. I don't know if you guys have used this a lot, but it's just an awesome way. Since you're already signed in, you can go right into Schwab, and let me just do this real quick. I'm going to scoot over here, and it just pulled up on a different monitor, and we'll pull this back over here. This just ties right into our demo account that we're looking at here. But what I'm going to do is I'm just going to go ahead and just do ADM over here, and I want to look at projected, that's right, projected earnings going forward. So here is ADM. What are we seeing on projected earnings? That's a one-day chart. Let's scroll on down. There are your dividends. Well, it's a Dividend Aristocrat, or over 25 years, 25 or more years, raising the dividends. Good information there. Now let's look down here though and just see what we've got in terms of historical earnings. Now, if you click down here under Show More, right at the bottom, that's where you're going to have to go to get the expected earnings. So what you can see is that the expected earnings, we came down actually 11% last year, and this year, well, from 2023 going to the end of 2024, it is down 24%. So we have been seeing sort of a downward moving slope in terms of earnings. Now, do you think that a downward earning slope of earnings, folks, could have impacted prices? This one's in the books, and it's expected to drop. There have been correlations between expected earnings, projected earnings, and share prices going out like 1 year. So it's going down. So the question is, how far down might it go? But this is what we're seeing here is there might be a reason why we're getting an earnings yield in the 9% range at this level. But earnings, would that earnings yield be at 9% if the share price falls further, or if earnings per share falls further? Well, let's just say the price stays the same, but earnings per share falls further. Well, what's going to happen is that earnings yield is not going to be actually that good, because the earnings on an annual basis could be dipping. Now, we don't know if this will unfold, and there's no guarantee, right, on these projections. It's just an expectation, and sometimes these do unfold, and you can get a really good sense of maybe where things are heading, or at least enough information to dig into it further. But if we go back over here now and look at the chart, ADM, oh, well, there's a pretty big dip in price. If we are looking at EPS, I'm just going to keep doing this because it will just get it down. So EPS, because this is our earnings yield formula over price. And if price dips, folks, what's going to happen over here to the earnings yield? The earnings yield, or EY for short, earnings yield as a percent is going to go up. Okay, now if the company can recover, if the earnings can flatten out, or if they could begin to tick up, that could be construed as a real positive too, because, well, the earnings yield could even spike up higher if prices stay low. But you have to kind of break down these formulas and get a sense of, okay, what is our expectation? What can happen as we go through and look at these? That's critical to do. What are earnings going to be doing? What's our expectation for earnings? Right now, they're suggesting earnings might be dipping. Quickly, let's go ahead and take a look. This is always helpful, I think, just to look at a longer-term chart. So there we are. And by the way, that longer-term chart, I can see there could be longer-term support through there. Very close to, it's not right on, but it's very close to 50, right? One of those big round numbers. No guarantee we're going to hold at 50, of course, but yeah, maybe things could shore up, in terms of prices, etc. That could be of interest, perhaps, to traders. Okay. So key point there. I want to do another one as we go through this and kind of look at it, look through this a little bit more in detail. And I'm going to try to kind of pair off here a little bit what we might be getting in terms of earnings yield, but also maybe a yield over here that could be a little bit, well, stronger, maybe in the 3% range or whatever the case might be, three or more. So I know we've talked about this company a few times, but there is Johnson & Johnson. So it's right about 7.86. The yield itself is 3.02 where it's currently at right now. I want to just take a look and see where we're at on the Analyze tab under Fundamentals and just see where they're at historically. This is not updating. Huh. Always check that symbol so you don't get wrong data. It should be because it is linked. Maybe I'll unlink it and link it again. All right. Looking for consistency or increases in those earnings right through there. Okay, so fairly consistent to 522. So there's clearly a dip. From 2021, it was kind of a spike, and then we went down in earnings and we went down again. And by the way, that 5-year trend is highlighting actually what I'm drawing right there for us to kind of take a look at. It's gone down a little bit. Now the question is could they potentially recover? That would be, among other questions, one that could be asked. Let's go ahead and pull up our chart that we were just looking at here. And there it is. And we're going to go into J&J now because we want to break down and see if that earnings yield is providing us with some interesting information. By the way, once you select, it's really a huge time saver here. Once you select that show more, which we did previously, section within Schwab, all you have to do, folks, is just throw a symbol up here. Bam. And it's just going to keep, giving this same section for you. A great time saver because guess what? I mean, that's exactly what we're looking for, right? We just want to see what does the expected earnings growth look like? What do the trends look like, et cetera? So this is on a non-GAAP basis. There's a GAAP basis as well that's not reported. I think non-GAAP is the projected one that we're getting. But if you look at this, it's basically earnings here are virtually flat. So we really haven't dipped too much. Some traders might look at that as being of interest. I will say that the revenues are increasing. So we're actually seeing more positive indications here with a J&J. I'll pull it up right now. And by the way, this was one of the sectors, right, that was showing a little bit of a potential reversal here. The earnings did come out today. I'm going to go ahead and click on those right now. They did beat expectations by a bit, but prices still haven't moved that much. In fact, still based upon, if somebody's just assessing something like this, where we're looking at this here, in terms of J&J, the yield's still over 3%. The earnings yield, I'm sorry, so the dividend yield, to make it more specific, dividend yield is at just over 3%. And then we're getting the earnings yield real close to 8%. So that is maybe what some traders could be looking for, maybe some comparisons that make sense to them. We have no idea exactly where, Johnson & Johnson is going to go. It's been consolidating for a little bit, and that's a real long chart, though. Hang on. Let me just pull this back out to a 5-year weekly to kind of see a few things. Okay, so, and I'd drawn in here previously, but, you do have some similar lows in there. You have some similar, for traders looking at this, this takes us up to about, it's about 62.5 or so. But you're getting close to, what is that? So about 17.5 points or something like that. I'm just going to kind of eyeball this from where we're at right now. But I'm just going to say, for example, this range where you get the double bottom in, especially on a weekly chart, some traders will take a look at this and they'll just say, I don't know, I'm kind of eyeballing it, but they might say that might be the measured move. In other words, this price over here is equivalent to this price. And that's how a lot of times these stocks can move into a measured move. A little bit of a change in trend. We'll have to see. There was some good earnings reports, but it was on a tough day too. So is that enough to get a stock like this moving? Well, that remains to be seen. But I just thought I'd throw in some technicals in there anyways as we're looking at it. Okay, a couple more things as we go through this. Let's do another one in here as we go through, and we'll kind of just, kind of look at that 7 and 8% range and see what we've got. We've got a property and casualty insurance company in here. We've got Nucor, a steel company. Materials was a company that was actually quite strong in terms of the sector. This is going to be a materials company. Let's see, we did a scan on materials. Nucor, right there. Nucor is there. Okay, so it has been it's one of the performers on going back over a month's time frame as well. There's your yield. So it doesn't have a huge yield, right? So it does have a better, I should say, huge dividend yield. The earnings yield is actually really quite good relative. I mean, it's the second, well, I guess the third highest one, if we're including in there Ben. And so there is Nucor. I want to take a look at Nucor with this as we go down here, kind of explore Nucor. We'll put this down here, NUE, and we'll scoot down and we'll see how these numbers have been looking. Wow. Since 2020, that's a massive jump right there. 2020 to 2021. We dipped back down in 2023. How is Nucor looking on a projected basis, projected earnings? Let's take a look. Back on Schwab again. And NUE. Okay. Enter, and we'll see what we've got. Okay. So key point, its earnings yield was 9%. But again, if the earnings drop, right? If the earnings portion, E for short, we are using earnings per share though. But if that drops, okay, the earnings yield, even if if prices stay the same, if earnings yield then therefore would do what? It would dip, because remember, earnings is the key driver, the numerator of our formula here. Okay, prices would actually have to drop further to keep that in line. If in fact, it does say E right next to it, so it is an estimate. Still want to reiterate that point. It's an estimate here, but yeah, it's still a key point just to note there. Okay. Let me make sure I'm giving you guys all of this, and I can actually go through the process of showing you how. I did see that in the chat earlier, so I can go through here and show you how to plug that in. There was a question coming through. We could do that, but let's just get this shared so you do have this metric to use. Okay, where are we? There we are. Okay, so back into the Market Watch tab. I'm going to send this out, earnings yield, edit formula, and I'll share it right now. I'll put it into the chat box, and there you go. Okay, so there it is, and that will also be included in the description section when we're done. When this is recorded and you see it, if you're seeing this in the archive section, it'll be under the more, just under the description in YouTube. Okay. Now, how would I add those in? What you want to do is you want to copy this, copy that code, right? Which I actually have copied already, but you can copy it out of the chat. You can go up top into the setup, and what you're going to do up there is click on setup, go down to open shared item, and then just type this in. Say, for example, or just copy it in first. So Control V, it would be actually Command V on a Mac, but Control V, and then you can plug that in there, hit preview, and then you can import this, you can name this, and then just click on import. And what will happen is when you then go into a column up top, you can right click, scoot on down, go to customize, and then just search that up. For example, earnings yield right there. You'll have it at your fingertips. Okay. So it's a really interesting reference, right? How much is that company earning annually from the based on the price that we're purchasing at relative to the earnings of the company itself. Okay. By the way, how's SJM doing? Let's just take a look at SJM. Oh, okay. So here's SJM breaking up into a range, but there is some resistance there. Longer term. Whoops, I just accidentally hit that. Let me click that off. A longer term SJM. Oh, sort of a longer term bottom, double bottom. Is there going to be a reversal that could take place here? That remains to be seen. It looks like it did take out its downward sloping trend, took out some recent highs in here. So definitely potentially an area, that you could look at if you were going through and investigating dividend payers. But really, folks, today, it was really just a discussion on the earnings yield and how we could use that to give us that quick reference and some things to check out too, right? Obviously with earnings, but how might we go ahead and take a look at earnings, its consistency, its potential growth, making sure that's consistent with what we've got. Just in case we get a high number here, we have some references to look at and some indications as to will those earnings continue in the future. So this is it's also a valuation metric, can be used for comparables as well, but just wanted to include an additional yield in there. So we've got the earnings yield and the dividend yield. Hopefully you found that effective and helpful, folks. Bottom right-hand corner of the screen, if you get a chance, just click on that subscribe button. So easy to do. Love to have you on board to get great classes that James teaches, other coaches. Love to have you here. If you found today's presentation helpful, smash that like button. Helps that YouTube algorithm, kind of forces it to keep this kind of content coming up more frequently. All right, and I do not think we did get a survey today, but there we go. But yeah, so another tool to potentially use going forward, folks. Well, on that note, I think we got through all the questions. Thank you, James, for helping out there. And excellent. All right, everybody. Well, hey, have a great rest of the day. We'll see you next time.